Hi, good afternoon, everybody. Good afternoon, everyone. Thank you for attending our York Region's very first FinTech event. We're thrilled to have you. I'll be your MC for the afternoon. My name is Mark Saltzman, as you might have just seen in the video there. I call myself a technology evangelist because I like to preach about the benefits of technology. And I do so in a few different mediums. I'm a freelance journalist. I live here in York Region. I work from home for the most part. And I'm fortunate to write for 36 publications in both Canada and in the US. I'm syndicated through USA Today's parent company, Gannett. So since 2000, I write for 102 newspapers a week through the USA Today network. I write for Costco magazine, and I'm on their TVs as well. I write for Yahoo, MSN, Toronto Star, Metro, Connected, which is a Rogers publication, TELUS Talks Business, Microsoft's small business blog, and many others. A very mainstream approach to technology. This is what I try to achieve, and it's not always easy in the tech world, is that I try to break down geek speak into street speak, because I think there's a huge void out there. The other 95% of people, so not preaching to the converted, but to everybody else that needs a little bit help in understanding the significance, the role that technology plays in today's society across all sectors. I also host 3 radio shows in Toronto. One is on News Talk 1010, formerly CFRB. It's called Tech Talk on Sundays at 6. And I do quite a bit of TV work as well. I mentioned I'm on Costco TVs, but I'm also lucky enough to work with both Canadian and American TV networks like CTV Global, CNN, and Headline News, including I'm a regular on what just folded last week, but the Nancy Grace Show on Headline News. She's quite a colorful character. If you haven't watched her legal show on CNN Headline News, she just stepped down and she's going to announce something again soon. Maybe she'll go to a rival network, but I was the only guest she never yelled at, which was pretty nice. Yeah. Maybe part of the reason why is because I always Skyped in my interview. I only met her, I believe, once from Thornhill, so she couldn't yell at me over Skype, I guess. And I'm also very fortunate to work with York Region. So as you saw, I'm working with the region to be an ambassador, if you will, to talk about working and living in the region. Oh, I also failed to mention I work with Cineplex as well. Someone said, oh, you're the movie guy. I do talk about gadgets and so before the film starts, which is a lot of fun as well. So if you get a sudden craving for popcorn, that's probably why you're used to seeing me on the big screen. And yes, I know I look a lot taller on camera. I get that all the time. All right, but I digress. Again, thank you so much for carving out some time on your Friday to join us for this event. We are going to be talking about financial technology, a fast-growing industry segment that's rapidly changing financial services. This is a disruptive space, as you'll see why over the coming minutes and hours, for a variety of reasons, and it is threatening to even shake up established financial institutions, including the 5 big banks, in a positive way. And no doubt they too are embracing this fintech revolution and what it means. All of these technological innovations that are here to better serve their customers and help their bottom line as well. And York Region, by the way, has no shortage of fintech companies. I encourage you to take a look at the handout that you have in front of you on your table to just see just a small sampling of the fintech companies that are here in the region. So today, we're going to have a keynote address in a moment that will provide an overall view of fintech. We'll have 2 panel discussions that will take a forward-looking view of fintech as well, with many opportunities there. And then we'll have a fireside discussion regarding what investors are looking for when it comes to investing in fintech companies. And yours truly will be moderating that chat, a fireside chat without the fire, but no, so it'll be good. And then it will be followed by a cocktail reception to immediately follow the formal part of our afternoon, and I'll be taking place in the foyer. I encourage you to join us there for a cocktail later on, please. If you're going to be tweeting out anything about the event, we encourage you to use our hashtag. It is simply hashtag, or if you're over 30, #, hashtag YRFinTech. So that's the hashtag YR for York Region FinTech, FINTECH. Please tweet your thoughts, your impressions on this afternoon's event. I do want to just leave off by saying that York Region's blown away at the interest in this topic. They had set out a goal of 160 attendees for their first ever FinTech event here hosted by York Region. We had no less than 300 registered attendees. So we're very thrilled with that, and representing 150 companies too. All right, at this time, I want to recognize our event sponsors. I'd like to thank Ernst & Young, Business Development Bank of Canada, Royal Bank of Canada, and Lloyd Media for supporting this event. And then finally, some housekeeping notes. The bathroom, if you need to use the restroom, it is just, right out the doors there, and hang a tight right and go all the way down. You can hug the wall. You're going to pass some activity at the Toronto Audio Video Entertainment Show, or TAVES, Consumer Electronics Show, taking place this weekend. So you're going to walk by robotics and 3D printers and really fun stuff, VR, virtual reality and augmented reality, but the bathrooms are right there. And we are going to have a break at 3 o'clock for some refreshments in the foyer as well. It is now my pleasure to introduce Doug Lindeblom. He is the Director of Economic Strategy for York Region. Please help me welcome Doug Lindeblom.
Well, thank you, everyone, and good afternoon, and we're really pleased to see you all here. I just want to bring greetings on behalf of York Region. This is, as Mark said, it's our first FinTech Summit, and we're absolutely thrilled with the interest that you've all shown in coming here today. Supporting business and job growth and helping support an economic vitality is a really strong strategic objective of York Region and our council. It's embedded in council's strategic plan and in the council-approved Economic Development Action Plan. And we're really blessed in York Region with a really vibrant and growing economy, particularly in knowledge-based industries like financial services that we're showcasing today, but also in areas like life sciences and business services and advanced manufacturing, which are all underpinned by one of the most robust information and communications technology clusters in North America, right here in York Region. So our team in economic strategy, and I want to thank them personally. I didn't get the chance. We ran a broadband summit this morning, and we're running this one this afternoon. And my staff are here and running both these events. And I just wanted to do a shout out to the folks with the red staff tags. Give them a pat in the back and a thank you when you see them, because they've done a tremendous job today for us. But our team at York Region, we reach out to the high growth potential businesses in the clusters that I described. And we host events like this one to do two things. The first thing is to demonstrate the opportunities to our businesses that exist here in York Region. And secondly, it's to help successful, talented people like you connect. We truly are that place where talent and opportunity intersect, as our video showed you earlier. It happens to be the slogan for that campaign that we just launched. And Mark didn't mention it this morning, but over the coming weeks, we're going to launch 100 bus ads in the region, and with our talent and opportunity intersects message, and Mark's face is on every one of those buses. So if you're in the region, watch for that. The other thing I want to say about Mark is that back in 2014, we were in the very early days of helping out our emerging digital gaming cluster. We identified that our staff were out and found that we had a whole bunch of these little digital gaming companies. And we also happened to have a little company called AMD that was doing the platform for all those companies. And so what we found out was that many of those companies didn't realize that the other companies were right down the street. So we ran a little event, and we actually got Mark to host it for us. We called it Gaming First Contact. It was it was small. It was about 75 people at that time, so it was much smaller than this event. And we did it in a pub in downtown Unionville. And it was a great success. One of the things that came out of that was a partnership between Sulon Technologies and AMD that led to the launch of Sulon Q, which is a virtual reality product. That connection was made at our very first event. That's what we're hoping we can accomplish here today. We bring folks like you together because we know there are opportunities in these chairs, and we know that you don't know everybody else in the room. And this is an opportunity for you to listen to the speakers and learn about what's going on in York Region and in financial technology. But maybe more importantly, it's about you connecting with each other and looking for those nuggets of opportunities that might turn into a real business opportunity for you. So with that, I just want to thank you all for coming and hope you enjoy the rest of the afternoon.
Okay, it is now my pleasure to introduce our keynote speaker, Tom D'Emanuele. Tom is a tax partner at Ernst & Young with about 20 years of expertise in the field of taxation. Tom has counseled clients in the areas of mergers and acquisitions, tax planning, and tax compliance. Tom will be our keynote speaker this afternoon, speaking about the state of FinTech, and that will be followed by about 10 minutes or so of Q&A. So please keep those questions in mind, and we will get to them right after the keynote. Thank you very much. Please help me welcome Tom D'Emanuele.
Thank you. No, that's fine. It's always hard to get my last name right. So thank you very much for having me. Welcome everyone to the 2016 York Region FinTech Summit event. Tom D'Emanuele is my name, tax partner with Ernst & Young. We've talked about this before. Thank you, Mark, for that wonderful introduction. I'm honored to be your keynote speaker, and I'm very excited to talk about the state of FinTech. So here we go with our slides. This is always my uncomfortable slide where I try and make you feel that I'm very important, but it comes here and we talk about me being a knowledge-based industry tax partner. All that means is that I specialize in the area of high tech and communications. I've counseled clients in a number of corporate matters, everything from mergers and acquisitions to inbound and outbound, and several other services. I'm a tax account leader for Ernst & Young in a number of areas and a number of clients, some of our most important accounts. And I'm the former director of tax at IBM Canada in the Caribbean regions. I also teach tax, and I've done it at all levels of the program for the in-depth, everyone from the accounting industry to industry and the government segments as well. So let's talk about FinTech and what is FinTech? And it's really, at a high level, linking technology with financial services in that sector itself. And typically, it's an online offering where we're talking about the development by a non-financial institution of a particular and innovative product. Generally, it's an innovative business model. It enables, it enhances, and it disrupts financial services. And we're going to be very general at the keynote level. We'll get into much more detail later on in the program here today. You're going to have a whole bunch of panels talking about FinTech in detail. So I'm going to give sort of a mid-level discussion. So some of you will be more advanced in this area, but please bear with us and we'll get into some more important discussions later on as well. So clearly it's an area of rapid change. There's a great deal of digital innovation. It's very high on companies' agenda. There's a lot of opportunities. And we even make a corollary to the dot-com era in terms of its level of importance and opportunity levels. Now, in terms of what Ernst & Young sees as sort of the general categories for FinTech, we have 5 pillars. And those 5 pillars are essentially looking at from the deposits and lending area, investments, insurance, payments, and enterprise. So those are right now what we define as the 5 pillars. That'll change as innovation occurs. That's sort of our general categorization. And what we found as a firm, that it seems like there's a lot of companies within the payment sector, and that pillar itself has some sort of sub-definitions where we talk about integrated payments and contractless areas as well. Integrated payments, just talking about point-of-sale terminals, linking in with other areas that used to be bifurcated. So you'd match customer records, you'd match the accounting, and this would be all automated instead of individually managed and reviewed separately. Contactless payments, we talk about technology that's in sort of the debit and credit area, fobs, smart cards, and mobile. Everything going from tap technology to using your phone, let's say even at a Starbucks, to be able to complete transactions. The next area would be insurance, and we see insurance as a big area. We talk about using wearables in this space. A very interesting occurrence these days is the smartphone, right? Our Apple Watches and our Fitbits. We now link them with our smartphones, and we have a company in the US called Aetna. They're actually subsidizing your Apple Watch, and what they want in return is they want your health data. So they're going to use the data from your watches to find out how active you are, to find out how you slept, to find out how you're managing your weight, using that information for purposes of doing the analytics and figuring out insurance premiums in the areas. Going to be impactful one day soon. We also find areas of enterprise interesting, talking about cybersecurity and also data analytics. Clearly the Yahoo attack that happened recently where all the customer accounts were hacked, a very difficult area. A lot of people worried about cyber attacks. It's going to become more relevant in the fintech space as we grow in scale. And data analytics, clearly a big rage, taking a lot of dark data, making it useful, analyzing it, seeing trends, and seeing opportunities. So what happened? What were the factors that drove growth in fintech? And we kind of think about three areas. One would be the 2008 global financial crisis. A number of things happened there. We had a lot of customer reactions from the financial services sector that were quite negative. We lacked trust. It was an institution that had a great deal of trust. Our parents used it, to be able to end up having the foundation for their lifestyle, and it was rocked. A lot of people lost a great deal of income and life savings. We had a scaling back of those financial institutions to small businesses and individuals. People needed money and they just couldn't get it from their normal institutions anymore because the financial institution had to constrict their ability to be able to give funding. We had to deal with recovery at the financial institution level. They had to worry about recovering their business and more stringent regulations as a result of what happened in the collapse. And because of that, because they had to focus internally, really the banks couldn't deal with all of the information technology and high-tech world that was going on around them. They had to internalize to be able to survive. The other interesting factor that occurred was a development of infrastructure and of smartphone devices. Really, the telecom companies stepped up. They went from a 2G platform to a 4G platform. They created an infrastructure that was fast, reliable. Now we could end up having less dead spots. We can end up going into elevators, receiving our calls. We could use our smartphones in a way that we could never do it before. So it was a fantastic development in terms of what our telecommunication companies could do. Consumers wanted more data. They consumed it ravenously. They shared it quite a bit on social media. They needed that reliability and they wanted it now. And then the evolution of the smartphone. It went from simply a device to be able to take calls, to text, to receive emails, and then to do everything from apps that were fantastic in terms of accessing accounts from financial institutions, to be able to doing research, really helping us run our everyday lives and do it efficiently. And then lastly, we have our demographic shift. And the demographic shift really talked about the impact of millennials. Millennials and Gen Xers became more important when it came down to the banks and financial institutions like insurance companies. They became more of a buyer of those services. They became impactful. Millennials habitually use smartphones for their lifestyle. They end up absorbing technology easy. They're trendy with technology and information. They're collaborative. They didn't want to do the traditional work effort, which was to walk into your normal retail branch, to sit down and to negotiate a mortgage or a loan or to do banking. They wanted it on their mobile app. They wanted it on their phone. They didn't want to end up wasting time in their life, and they wanted it personalized. So that industry itself, when you look at it, when it relates to the millennials, they've changed it in a real meaningful way. A lot of millennials are more interested in what Apple and Google are doing than, let's say, a traditional financial institution. So they became impactful at the end of the day. Now, what do we have as a current state of fintech? Let's look at things just from a geographical perspective. So if you look at fintech hubs, we have Silicon Valley and New York in the US. We have London in the UK or in Europe. And then we have Hong Kong and Singapore in Asia Pac. These would be considered sort of real decent fintech hubs and locations where significant financial institutions are. Then when you look at our Canadian hubs, we did this in alphabetical order. I wanted to put York Region first, but of course, Montreal, Toronto, Waterloo, and York Region are our various Canadian hubs and become impactful. We've just seen from some of our illustrations earlier that we have some significant areas of fintech that we have right around us, and it's a fantastic movement. What we see is very impactful too is just the capital funding in the space. In the last 5 years, there was $23 billion in VC funding that occurred. And half of that was in 2014 alone, significantly up from the 5-year average. So if you could see that graph of capital funding, clearly it's spiking in a significant way and recently. And that sort of shift or that tone of the rate of change is even higher in 2015. Consumer optimism regarding technology is at an all-time high. There's a high confidence in the sector regarding growth, and there's a lot of funding that's occurring in specific sectors. A lot of it's centering in the US, but we're seeing a huge increase in London. Massive year-over-year gains. Also, the regulatory environment is impactful in the state of fintech. So our banks, our financial institutions, our insurance companies, they're all dealing with a great deal of regulatory issues. Anti-money laundering, looking at FATCA, looking at KYC and knowing your client. All of these regulations require them to do a huge amount of work efforts. And they have to be able to focus on this as an institution itself and dedicate significant resources to it. Fintech companies enjoy a reprieve. They don't have the status of a financial institution, so they're not slowed down by these regulations. They also don't have the same bricks and mortars associated with a traditional bank. So it really helps them being nimble, and it doesn't slow them down in terms of being able to deliver. Technology itself, when we look at technology, it's rapid in change, it's innovative in its approach. The products and services are unique, they're highly personalized, and they're fast and they're cheap. So banks and financial institutions in general, while they may be late to the game, they're realizing the importance of fintech. They're starting to partner. They're starting to use it in their everyday lives. You can see Scotiabank's area of digital factory. We've got a lot of financial institutions doing innovation lab sponsorship. We see incubators being supported. There's a massive acquisitions opportunity that's involved with the banks as well. They're getting involved regularly now. So let's talk about EY's adoption index for fintech. So what this was a survey that we did. And what we did was we took 10,000 people, and 2,000 of them were in Canada, 10,000 of them were in various countries, the UK, the US, Hong Kong, all over. And what we did was we said, let's define fintech, particularly for this survey, as being a financial service product. It's developed by a non-bank or a non-insurance company. It's an online offering. That's essentially what fintech is for the purposes of this, this particular reach out. So fintech services that we defined were very close to the 5 pillars, and we said, who would be a user or who is active in fintech? Someone who are using at least 2 of those services within the 5 pillars that we talked about beforehand. And we did it at the end of 2015, so in the last quarter of 2015 in terms of timing, right? So around a year ago. And what we noticed was that 8.2% of our respondents were actually using fintech services in the last 6-month period. But in probing, we found that there was going to be a tripling of that number in the next year. So clearly there was a desire to end up accessing more fintech products in a very short time frame. We found that fascinating. Now, you might say that a number of countries were reviewed, and 10,000 isn't a representative number, but we would say it's directionally appropriate, especially when you take a look at the capital funding, you take a look at the dominant ideology, the news in the space, the banks taking particular note of fintech itself as a a moving product that they had to adapt. So let's take a look now about Canada in particular and how it compared to the overall average. We had 8.2% as being the Canadian adoption. The average was 15.5. So clearly we seem to be a bit slower to adapt, but when you look at it, if you look at the typical fintech user, it's generally a younger person who is above average in income and in an urban area. So if you look at the countries we looked at, they would have a higher concentration of those individuals. So you'd explain some of the disparity. But there are other reasons as well. And I found this kind of fascinating. So the reasons for using fintech, they're obvious, right? You have easy, cheap, efficient, and a better unique service that's being offered. Clearly that's a reason for people to use fintech and use fintech often. Why they didn't use fintech, I found this to be interesting. It wasn't about a lack of trust, it was about a lack of awareness. So there obviously is a marketing gap or an innovation that's happening very quickly in the circumstances, and people just don't know all of the services that are out there. So is there a marketing opportunity? What we're seeing with our fintech clients is there's a lot more partnering going on. There's a lot more partnering with financial institutions and other companies to acquire more consumers in the space. It's a costly area for them to adopt new people into the platform, so partnering is their requirement. Trust, if you talk about the people who are using fintech, clearly it's that younger millennial generation. There's not less apprehension for using technology, so trust isn't that main issue. So that's explained. Now, I've been given a 5-minute warning, so I'm going to have to speed up here. And unfortunately, it's the more detailed slide, so we'll be very quick. We talked about the first row earlier. Now we're talking about more of the future innovations or things that are a little bit more current. If you look at the investment space, you have robo-advice being something that's very interesting in today's world, using algorithms to be able to predict future performance. I think we have some discussions about robo-advice later in the panels as well. They'll go into it in more detail. You have self-driving vehicles. There's an interesting aspect for insurance. Let's say a self-driving vehicle picks you up and you're going to go from point A to point B and it gets into a car accident. All of a sudden, your age, your gender, your driving habits, they're irrelevant. So who's going to end up paying for the car accident if it does occur? Is it the car company that sold you the car? Is it the software company that uses the software to pilot the car? Who is it? So clearly, some movement in that insurance space. Blockchain is something that came out of the Bitcoin result of cryptic currencies. This is a hard concept to explain, right? So if you think of a block of transactions, right? So we're going to talk about the block and then we're going to talk about the chain. There's a block of transactions that you're going to look at. You're going to give it a unique signature. You're going to give it a fingerprint that's unique. So now, anytime that particular transaction moves in any way, shape, or form, you'll know it's not appropriate. So it's given some level of security as to being correct. Then you take that block of transactions and you link it with other similar transactions. So any divergence would be highly, highly noticeable. So that's the block and that's the chain. That seems to be something that financial institutions are looking at to validate transactions that occurs in the past. Think of your bank account. Tom's bank account, I've done transactions for the last 3 months. That's my block. Now let's link it to my chain. What about all the other times I've banked at RBC? Maybe for a full year. We link it to the chain. Maybe my lifespan of banking with the company. Maybe other products. So then those fingerprints become really hard for you to end up diverging from. So that's blockchain. So I'm trying with the 5 minutes, I'm sorry. Closing thoughts. So financial institutions clearly had a strategic advantage at the beginning. They were our trusted advisors. Everything changed with the financial crisis and technology and the demographics. At the end of the day, the barriers to entry were high in the past. Now they're really low with fintech companies. Disruptive IT is occurring. A lot of innovation is occurring. We see customers are reaping the benefits because things are more personalized, they're faster, they're cheaper, and they're better. But what about an equilibrium to be established? What about a balancing between data privacy and convenience and cost? Is it really worth it for us to be able to get better premium information? What about someone having a wearable like ourselves? And it's not just the young male who happens to have a high rate of insurance who wants that wearable to bring the costs down, but what about all of us? What if we're all looked at on a daily basis and our premiums are judged in that way? Is that too much of a big brother concept to adopt? Perhaps. What about technical innovation and cyber attacks? FinTech's getting more scale. Will they then be in the regulatory environment that we were talking about beforehand, or maybe something a little lighter, something in between non-regulated and regulated? Who knows? Clearly, financial institutions are adopting more of FinTech in their daily lives. They're investing. But who will own the IP? Will it be the FinTech company, or will financial institutions with their resources acquire them? Or will banks take that IP and offer it to all of us so that we can end up using it, almost like operating software in the past? It used to be restricted to one provider. What if it's open source? And then maybe it's just a creative platform for FinTech companies and the like to be able to develop. And it becomes our creative area to learn and innovate. So we see the future is changing, it's exciting, and there's tons of opportunity. Thank you very much. Questions?
Thank you, Tom. Yes, we would love to, thank you, Tom DiManuel. We want to open up the floor to some questions for Tom. Some questions. We got one right here. We have a mic. Thank you.
Thank you, Tom. That was actually really enlightening. One point that you captured that I saw on one of your slides was with regards to future innovations, specifically with regards to open data and with regards to identity management. Can you talk a little bit more about that, please?
So, I mean, I can't get into each and every one of the subcategories, but data and identity management clearly is a crisis, right? So there's always the worry about cyber attacks, getting that identity and using it for nefarious purposes. Some of the blockchain technology and some of the other cyber technology we talked about beforehand is a way to provide some cryptology towards it all. We have an area of the firm that actually specializes just in being able to provide our own areas of cyber attack defense. Some of the first things you need to consider if you're worried about cyber attack defense is if someone wanted to end up attacking your company, what would they want to get? Most companies would have trouble answering that question immediately. They'd have to think about it. Once you identify the things that would become most valuable to people in the cyber attack range, then you can start putting into play some of the areas that you need to end up putting defense mechanisms around. Also, you have a lot of platforms that are available from a software area that can monitor cyber attacks automatically on your space and provide the notes to internal IT departments. So there's a lot of things that can be done in terms of creating security in that area.
Do we have?
Can you compare maturity of the fintech startups in Canada and US?
So, a great question, comparing fintech startups in Canada and the US. We see in Canada a lot of fintech startups are really in the spaces of payments and wearables. That's where we see a majority of our client base, at least. In the United States, you might see a little bit more, because of critical mass, they might be more into the cyber attack area, they might be more into blockchain area, they might need to be more specialized areas simply because of volume and because of some of the fintech funding that's available from the VCs. So we see more specialization in the US, more breadth.
Hi. What do you think? What are the regions Canada is still behind to the Asian country in the fintech, and what are sort of each levels of government can do sort of stimulate this sector?
Okay, so the question is, why is Canada behind, let's say, some of the Asian countries? So one of the things that I looked at in terms of profiles was just, again, going back to some of the previous statements, who's the typical fintech user? Generally someone who's in an urban area, is a young professional with above average income. So if you think of Asia and Hong Kong and some of their areas that are really packed together in an urban center, you're just going to see more critical mass. So you're going to see more adoption, more early adoption of fintech technology in Asia. What governments are doing is, really they're not providing the regulatory environment that would stifle fintech. By government not imposing regulations at the time, you're allowing fintech companies to be nimble and to innovate. To the extent that governments are going to get involved, you might see a little bit more regulation in the circumstances. Right now, the funding is already available at the VC and PE levels, so it's not like there's a need for dollars. So the fact that government is a little bit quieter in this circumstance is actually a good thing from my perspective. There might be some issues in terms of IP development in China and India relative to the rest of the world, but those are, you know, country and historical issues.
I have a question here.
Great.
So I just wanted to, I know this is a very broad topic to cover in a very short time, but I just wanted to point out a few things. One of the things is that we should not believe that fintechs will not come under regulation, because if they want to hold or manage client funds, they are subject to regulation.
Yep.
If they want to sell any of their services to banks, they will be required to comply with the regulations that the banks are subject to, and if they want to maintain a positive reputation in this market, they will want to make sure that they do so. In fact, in other markets such as Europe, where there's PSD2, the Payment Services Directive 2 from the European Central Bank, they are moving to regulate PSPs, payment service providers, under a secondary level of regulation, which will also enable banks or require banks to open up their banking systems to these third-party services to provide services on by approval from the customer. So there are other markets that are moving ahead of us on this. The other thing I think we should keep in mind is that not all fintechs are working in the consumer payment space. There are many working also in the corporate and commercial payment space, and we don't want to lose sight of that. Another fintech hub that you didn't mention is in Sydney, and they're doing a lot of stuff in Stone and Chalk. And there's also a lot of payments, not only domestically, but global remittances are a very big part of it, as well as FX areas, because that's where a lot of the friction in the payment system exists, and there's customer inconvenience as well as high costs that are being charged by the banks. So that's an opportunity for some of the fintechs to come in and do services to to enable customer convenience and reduce cost. So sorry, I don't really have any questions.
Okay.
I should also say that blockchains work in exchanges that tend to be closed exchanges. So your concept of having an individual blockchain for a single customer, I think, is misleading, because they really work within the exchanges and the participants in the exchanges, which tend to be the banks for payment blockchains in particular. So when you looked at SWIFT or Ripple or R3, those are where the blockchain exchanges are. In fact, Ethereum, which is a very big blockchain player, is based in Toronto, and they are focusing on these cross-border big blockchain things. Thank you.
Great. We have a question here.
Hi, Tom. I'm helping the small business owner doing the business development.
Okay.
I found that, the fintech, is it very focused on the B2C instead of B2B, especially on the payment gateway?
Well, I mean, the peer-to-peer one was one that really developed from the financial crisis collapse, so it seemed to have been the more prevalent one. There is a P2C movement as well. You can see it happening, you can see a lot of development, but to be quite honest, it's not an area I've focused on. So, okay, so I'm getting the pull in terms of minutes. You know what, maybe we can end up having that discussion afterwards so we can get into more of the day's events.
We will have a break at 3 o'clock if you'd like to chat outside, if you're able to stick around for
I'd
that
be
time.
happy to.
Thank you. We have time for one last question. Yes, sir? Yes, sir. Thank you.
Sorry. So the question was about seeing IP offshoring and whether you're seeing that a lot in the fintech sector. So innovation is quite key in the fintech sector. It's where all of the development is occurring. All of the creativity behind it is developing IP. The IP itself, we deal with a lot in the tax concept area. And the new OECD model talks about DEMPI analysis in terms of where the IP is developed, enhanced, maintained, protected, et cetera. So a lot of companies are actually getting specialist expertise to be able to do the developments in the main sectors. We don't see a lot of offshoring of IP because a lot of the rules that made it efficient in the past are being closed down.
Great questions. Thank you very much. And again, Tom D'Emanuel, thank you so much for your time from E&Y.
Thanks so much.
Thank you. And I apologize for butchering your last name earlier. Okay. I would like to now introduce our first panel discussion. The name of the panel is The FinTech Revolution, from Back-End Systems to Mobile and Wireless and Wearables, Serving the Connected Customer. I'd like to introduce the moderator of this panel, AJ Gopal from BDC. If AJ can please come up. AJ joined the BDC IT Venture Fund in early 2016 as a senior analyst. Prior to BDC, AJ has more than 7 years of capital markets experience, beginning with his career in investment banking at Citigroup in New York. An avid investor, AJ has experience in hedge fund and private equity investing, straddling both New York and Toronto. Over to you, AJ. Thank you. Please help me welcome him. Have a great panel.
Thank you, Mark. Good afternoon, everybody. As Mark mentioned, my name is AJ Gopal, and I am a venture capitalist with the BDC IT Venture Fund. We are active investors in the fintech space, with a substantial portion of our portfolio comprising of fintech. I'm humbled today to moderate our panel that is comprised of 4 highly successful individuals from across the financial technology landscape. So with us, and perhaps you guys can start making your way up, we have Mark Ripplinger, President and CEO of Everlink Payment Systems, Christine Day, who's the Chief Information Officer of Questrade, Alex Benjamin, co-founder and CEO of Lendful, and finally, we did have Donna Galloway. Unfortunately, she had a passing in the family that occurred, so our condolences are with her. But Patrick Lanigan, who's Vice President of Marketing from Strategic Information Technology. So welcome to our panel. Oh, perfect. So perhaps I'll just start with a simple question just to get some context. Could each of you spend maybe a minute or two introducing yourselves and your company?
Sure, thanks very much. First of all, I'd like to just start by thanking the York Region team for organizing this event and allowing us the opportunity to come and share some time with you. I'm honored to have the opportunity to represent the amazing team at Everlink here at this conference. So Everlink, a little bit about us. We've been in business now for about 12, 13 years. We are a payment solutions company. We provide a broad, diverse range of payment solutions through 7 vertical lines of business. They're highly diversified, yet highly integrated. We provide payment network gateway, so that's transaction processing and linkage to Interac, Visa, MasterCard, and the other card associations. Card issuance and management, fraud management solutions. We do mobile payments. We have an SME solutions line of business, which includes merchant services and fintech integration. And we have professional services and ATM managed services, so 7 verticals. And I suppose perhaps the best way to just close to describe our company is by using our moniker of our 4 pillars, our value proposition. One is performance. We operate our environment, operate our company in the upper first quartile of performance relative to our peers in Interac, Visa, MasterCard. Last several years, we've run at 100%. Can't get too much better than 100%. Strength. On strength, we run a very strong balance sheet, good EBITDA, good net income. But above all, and more importantly to me, is we've had 0 defection, i.e. we have 100% renewal rate as we've been growing our company. So every single customer we've ever had is renewed. Innovation. We're extremely innovative. We've won a few innovation awards in the last several years. We're very innovative in card issuance with instant card issuance, first in North America to have an instant card issuance solution that is EMV or chip and pin. We have a couple of new innovations just in the last 18 months or so, 12 months. We have wearables, so we have a debit wearable we call debitware. And we have just introduced a lock and block, which is a way to use your mobile phone to lock and unlock your debit card, soon to be also available for your credit card. So highly, highly innovative. And then finally, in our 4 pillars, and this is the one I am most proud of because it matters less what I say, it matters more what our clients say. And we conduct an annual client loyalty and engagement survey. And the clients come back, and for the last 5 years, our 5-year average has been just under 90%, which in the Net Promoter Score for Loyalty Index, that's about the 96th percentile of all companies in the world. So we're extremely proud of our organization, and I owe it all to the amazing and unbelievable Everlink team just down the road in Commerce Valley.
Thank you. Hi, afternoon, everybody. My name is Christine Day. I'm the Chief Information Officer for Questrade. Questrade is an online brokerage. We're the fastest growing and largest non-bank brokerage in the country. We provide the technology direct access for all of our clients, supporting Canadian retail, all clients to trade directly on all North American exchanges. We also support Forex transactions, international transactions, and it's all direct access, so there's no middleman whatsoever. We are a Canadian company. We are privately owned, started in '99, and have been actively growing ever since. And our mission is really about servicing Canadians and helping Canadians to be more financially successful and more financially secure. We're also the first in the country to launch a robo-advisor. We work directly with the Ontario Securities Commission to prove that it was possible to have a meaningful online conversation with clients within the regulatory framework, and leveraging entirely technology-driven solution where no phone call was necessary in order to evaluate risks, determine the investment needs of a client, and successfully invest them in a long-term portfolio. We own our technology end-to-end. Nothing has been outsourced. That includes the entire client experience, all automation across the brokerage, and really the entire backbone from the moment a trade is entered all the way through to its clearing at the end of the day. And that's what we do.
That's great. Thanks. Hi, everyone. My name is Alex Benjamin. I'm the co-founder and CEO at Lendful Loans. We provide credit-worthy Canadians with up to $35,000 in credit on a 5-year term. Our mantra is we are here to shake up online lending, basically, and branch networks. So we started the company last year in Vancouver. Sorry, this is not close enough. We started the company last year in Vancouver in March 2015. I moved over from Australia on the startup visa program. And got the business started. We secured a partnership with Alterna Bank of Ottawa last year with a $15 million debt facility, and they've just recently become a shareholder in our business. We have an office here in Toronto, Montreal, and in Vancouver, and we're one of the fastest growing fintechs. We're really excited to be here. Thanks.
Hello, Patrick Lanigan. I'm VP of Marketing for SIT. We're a banking software company. We've been around since '88. 5 of the 6 largest financial institutions in Canada use our software. We do all that hard stuff behind the scenes in retail, investment, deposits, and lending. So we do a lot of back office stuff and are traditionally known as a back office system. But what we've done to really enable our customers going forward, Manulife being one of them, Scotia, Royal Bank, et cetera, is really open up this platform so we have a digital interface so we can interface to any fintech company or any technology company whatsoever because we have an open interface and we can enable access to all this rich functionality of this platform. And so it's a real fun time to be in tech right now, that's for sure. So exciting. Our digital interface is doing really well. We have a partner out west, Mobile Earth, who a completely different system, doing mobile lending using our platform. It's fantastic to see. Thank you.
Great, thank you. So I was going to start with a light warm-up question, but I think I'll jump right into a controversial question. A quote from Bill Gates: "Banking is essential, but banks are not." Given the argument that cost and efficiency are really the tangible barometers of customer happiness, which currently isn't being fulfilled by the status quo, do each of you think that big banks will exist in the future?
I've got the microphone. I might kick it off then, shall I?
Sure.
Look, I think if you go back to sort of, the original, the premise of banking, it is to create an orderly, system where people can safely deposit money and borrow money. And I think it's, banks will always be key to economic success, and they play an important role in the community. I think with fintechs on the scene, it's just it's a new way that customers can interact with their bank, but also obtain similar products in a seamless and really easy way, and that's what we're really doing with our business. Okay.
I believe that banks aren't going anywhere. That said, I think they will no longer have the kind of domain that they've been accustomed to. The influx of all of the new incumbents will create a much broader competitive space, and it will force the established institutions to change the way in which they balance the focus between the needs of the shareholders and the needs of their clients. And at the same time, the incumbents will start to assume some of the functions, some of the services, and some of the market share, but I don't see them being eliminated entirely.
I'll just sort of pick up where that was. I don't think the banks are going anywhere anytime soon. They're too big. Too big to fail, I think was the word that was used during the 2008-2009 financial crisis. But more importantly, that's where I think probably virtually, if not every single person in this room, has a bank account to transact business. Your deposit account is how you monetize exchange of funds, exchange of value. So I don't think they're going anywhere soon, but they definitely will be challenged to adapt. It's kind of like the old Darwinian thing. It's not the strongest or the biggest or the most powerful, but the one that's most adaptable. So we're going to see those banks which are most adaptable move forward in the next decade or more, whereas the ones that are staid and quite stodgy and rigid in their ways are likely to get hit a little bit. Moving to mobility, moving to diversification, probably less branch interaction, more person to machine or person to bank via machine, and certainly a number of different alternatives in payments and in banking services all around. But they're not going away.
No, I don't think big banks are going anywhere. They may transform, but it really comes down to marketing. You can just do the math. It's really, really easy. FinTech's number one challenge is the cost per customer, acquiring that customer. Go Google right now, personal loans. Go Google investment. Go Google TFSA. Those words all cost per click $10, about $10. So every time you click, it's cost that advertiser $10. It's really hard and a high cost. Lending Club, for example, their cost per customer is about $200. So it's really a branding play, and it's, but at the same time, this mesh, what we believe is happening is the fintechs are going to come together and partner with traditional financial institutions. We already see that happening. Grow is doing it with credit unions. Borrowell is doing it with CIBC. There's just an announcement today or yesterday. We see a lot of that happening, but primarily because it's a branding play and they don't have market and brand share. And you've got to hit Google, and when you hit Google, you hit, I just did a credit card loan, and I hit everyone from Oprah to whatever. Those are the organic results, and then if you want something that's not organic, like you'll see Mogo Bank there, well, they're paying $10 per click. That's the world.
Can I just add to that?
Of course.
Being an online lender and a fintech, CAC is a really important part of that equation. But I think one of the really key things here is we don't have the same operating structures. So yes, we might pay a little bit more for customers, but we don't have the rent of a corner city block that a lot of the big guys have, and they see us coming. And we've partnered with Alterna. They've invested in us, and they've given us a huge debt facility, and we've got other banks as well that are really keen to talk and partner because they do see it as an opportunity and a great way to deploy capital in a really seamless way.
I'll just add one more thing as it passes back.
Of course.
Just a couple of statistics, maybe little known statistics. So 2015, big five banks made $35 billion in profit. That equates to about $100 million a day. So if that trend was continuing into 2016, that means that today, the big five banks earned $100 million. And that's after what the expense structure we're talking about, right? That's after the towers are paid for, the 5,000 some odd branches across the country, all of the employees who work for the banks and so forth. So yes, certainly marketing is a challenge and reaching customers is a challenge, but at the same time, as this picks momentum, this fintech change picks up momentum, and the regulators pursue the activities that they're pursuing, we will see that the media and the press starts to support the fintech changes. And through the media, that will be the mechanism by which the general public becomes aware that change in this country is necessary.
Great. So a question following up on that. So, I think we've kind of established that fintechs really won't be a replacement for the big banks or any of the large financial institutions. So what do you think that the kind of specific role is for fintechs in that regard? Where do they operate? How will they look kind of going forward? Kind of in what manner would you think about that?
Yeah, that's a very broad question. I mean, there's a whole lot of answers to that. Fundamentally, though, I think fintechs fall into two very broad categories. One is the disruptor, and one is the collaborative enabler. And they're not necessarily mutually exclusive either. But disruptors, we talk about fintechs as disruptors because it's kind of romantic, it's kind of neat and cool. But if you really think about it, there aren't too many successful fintechs that are highly disruptive. They're largely additive, they're largely enabling, they're largely accelerating. They certainly enable financial services in a different way. Is it disruptive? Well, gosh, I mean, that's sort of a scale. In some cases, and the ones that are used all the time, and they're not fintech per se, but people always talk about Uber and Airbnb and those sorts of organizations that have engaged mobility, engaged technology and the internet to completely disrupt the foundation of established businesses. Yeah, those are a couple of organizations in the tens of thousands, if not hundreds of thousands, that have entered the space. So in fintech, we're going to have some disruptors, absolutely, positively. But in the main, their role is to enable, to accelerate, and to adapt, to sort of almost force organizations who might otherwise be a little bit slow on the uptake to really look hard at how to move things more quickly. At Everlink, we use fintech to do that very thing, to get us to market quicker, to get us to perhaps bring a whole different perspective to thinking, to provide different functionality and different sort of technologies, which we might not get at as quickly or as effectively if we were to do it entirely internally. We can't be everything to everybody, so we look to fintechs to be partners and enablers.
Look, I'm going to say I disagree. I think one of the key things here is disruption is really critical to the customer, and that customers want to see innovation and businesses that move quickly and react to their immediate needs. I think that you are starting to see strong disruption because the banks are partnering. The banks are getting in because they want to learn what's going on. I think if anything, they can see how fast we're growing. Our loan book growth is, we're doing 4 times the volume of our competitors in the space, the Borrowells and Grows of this world. The banks are seeing what's happening, and I know that customers are actually saying, okay, I don't need to go to a branch anymore. I can log on at home. I can do it in the office. I can sit there with my financial planner and I can apply for a loan and get out of credit card debt. And so we're really seeing that customers are very much warming up to disruption, and they're feeling like, oh, there's fresh air here, that we're breathing life back into an institution, a space that institutions have dominated. Christine?
If I could add to that, I feel like we're on the same page on a lot of these things. So in my view, the role of fintechs is, it's the same thing, really all about the consumer. And ultimately, whether they obtain services through banks and traditional institutions in the future, or whether people obtain services through new providers, that the nature of the services that are being offered, the quality of the services that are being offered, and the price point of the services that are being offered are going to be a result of this disruption. And even in our industry, we consider ourselves to be disruptors, always have been disruptors. When we embarked on the trading space, it cost over $30 to place a trade. That was by far the norm. We entered the space with direct access technology that allowed people to place transactions in milliseconds, so in a much faster and get better pricing for the stocks that they were purchasing. And we were charging $9.95 a trade. And now, any of you who have online investment, with whether you be with banks or not, you don't pay anywhere near $30 a trade. And we were the organization that brought that to the country. So we have always been the advocate of the customer, and that advocacy is what is going to fundamentally change financial services, regardless of how the shakedown goes.
Yeah, so the consumer wants what the consumer wants, and to everybody's point here, it's just, it's faster. We call it frictionless. It really is just making things frictionless, and it's been great to see all the innovation and copying and everything. It's been great. So I think it's, there's a place for both. We're a fintech company. I think everybody up here is a fintech company, a financial technology company. But it's nice to see the newer upstarts focused, really highly focused on just getting that loan approved in minutes or hours, whereas traditionally that might have taken days. That's awesome. And so that's what we want to see out there for everyone. I mean, that, we're moving all boats will raise higher. Yep.
Thanks. Well, a couple of thoughts. First of all, I said in my opening remarks that it's about adaptability. And I think that the financial institutions, that banks, et cetera, investment companies, lenders, whoever, if they're adaptable, they will embrace the fintech revolution and start to add on or augment. But again, perhaps with present company accepted, most fintechs aren't that disruptive. They're more additive. If you look at the fintechs that we use at Everlink, I think analogously I'd say that we see ourselves kind of as the car. We're the total solution, but fintechs have a better transmission, they have a better radio, they have a better air conditioning system. So we bring them in and we augment our service. But without the car, how many of you go out and buy a radio or an air conditioning system without the car? So it's kind of, I still really embrace the notion that it's enabling and additive. Now, they can be and they are disruptive in many cases, but I think in the broad spectrum, in the main, it's not that they're entirely disruptive, but really add value. Talked about the consumer, absolutely, no, positively. It comes down to what the consumer is going to pay for. And so the supply-demand curve is alive and well in the free enterprise model that we still more or less embrace in Canada.
Alex, I think you were on the edge of your seat wanting to respond.
I think what's really happening is it's an unbundling of a segment. So really the fintechs are coming, we step back and look at all of the banks globally and said, all right, well let's look at their cost structures and how do they make money? And then can we unbundle it super, super quickly and develop our own lending platform and get really, really, really good at one thing? Which, again, you really create value super quickly for the customer, because the way that technology is going, that they can pick and choose now everything out. They don't need to go to one place. They can actually really see transparency in the value proposition and just choose what they want. They can book one flight with one website, book it with another one. So, yeah.
Just one extra comment. Somebody asked earlier, what can government do? What Canadian government could do is come up with a Canadian securities regulator, a single one. That would just be awesome. This is just really, the most exciting part of Lending Club for me wasn't on the lending side, although that's exciting too. It was on the investment side. We were the technology behind Community Lend, Canada's first peer-to-peer lender. And they waited and they waited and they waited for Ontario's Security Commission to move and to agree that they could accommodate investors. Never happened. They restarted themselves as Finance It today, and they're doing well as an entirely different company. But the Ontario Securities Commission could not move fast enough.
So I think we've established kind of three things at the moment. One, the large financial institutions are not going away. Two, the customer acquisition cost is still quite high for some fintechs relative to others. Maybe that's debatable depending on your business model. And third, I think the customer is demanding different experiences and a disintermediation of financial services. So my question now is kind of focusing a little bit more on the technology, but do you think that the success of fintechs really hinges on the ability to have open APIs with financial institutions and freer flowing information? Sure, Christine, please.
In my view, it really depends on the intent of the fintech and the business model. So, there are certainly lots of opportunities for fintechs to independently develop solutions and, work entirely outside of that system. Questrade is an example of that. But if what you're trying to offer really needs to tie into mainstream flows and your target audience is such that they're unlikely to move away from those existing established institutions for those main flows, then the only way to add value is to actually integrate. That said, if I was the investor and I was building a fintech business and it was choosing whether to go and support one that was dependent, its success was dependent on that integration versus one that was not, I would certainly want to invest in one that was not, because I don't think that openness is part of the DNA at the moment of some of these institutions.
Yeah, we should partner, I think, by the sounds of things. I think, there's an important piece here, which is also where does the value lie in a business and how you create it, to your point. And I think how can you build enterprise value for your investors, and you really need to have a strategic edge as well. So you're not, you've got diversity in sources of supply and sources of demand. So, yeah.
Yeah, when you talk about openness, did you mean just Royal Bank, as me as a customer of Royal Bank, openness data with myself or with other?
More so around a fintech, maybe potentially getting access to customer data, which from an acquisition cost, obviously for a fintech is quite expensive relative to the banks who already have that data and have that customer touch point.
Right.
I could see kind of a clear partnership potentially, but.
Yeah. I want any bank I belong to be more open with me and to add value to myself. I signed up for Wealthsimple. It's available on my watch. That's way cool. It's a motivator. It's an investment motivator. Maybe I won't have that triple espresso at Starbucks, because I want to go away in a few years to some exotic island. It's a motivator. It's just on your wrist. The other area that's really exciting, of course, in fintech is AI. And it's a little scary at first. What's it going to do with my data, et cetera? But I wouldn't mind a little nudge every now and then by my bank to say, Patrick, you pay this gym membership every month. Are you going? Just a little nudge every now and then to revisit your finances, and maybe it sees some pattern that I don't see, or I tend to keep too much in my checkings account, or I pay off my credit cards too fast. Those kind of things may add tremendous value in the future. So that's I just want the bank to be open within itself, even not even sharing that data with others. That I do. It's just a little scary as to what could happen to that.
chime in. I guess timing is everything. In a lot of respects, consumer demand and the technology shifts and changes, and the fact that we have supercomputers in our pockets now. But timing is everything. Sometimes innovation is moving faster than commercialization. I've seen a lot of small startups, a lot of fintechs that, gosh, they've had just the greatest idea, and okay, I know they can bring value to the table, but the timing just maybe wasn't right. So I think what we're looking at when we start talking about financial institutions and their ability to embrace and adapt to fintech, some of it is about timing. There's only so much change that an organization can absorb. There's only so much change that a consumer can absorb. And I think the other thing, there's a symbiotic relationship between convenience and ubiquity. In the fintechs that I've seen that have really been successful, who have really made a distinct difference, truly added value, they've really enabled, they've made something really, often something that was very complex or cumbersome, simple and easy. They've really accelerated the enablement. But there's a symbiotic relationship to ubiquity. Even things that are extremely convenient or extremely easy, if they're not ubiquitous, they're going to fail. And I think that we've seen that certainly in the payment space. We've seen that with very innovative payments products coming forward that are very convenient and really cool, but you can't use them in more than 3 or 4 places, so it just starts to fall apart. So the whole notion of fintechs and financial institutions, sort of our classic banks and so forth, coming together and working together in more of a partnership is kind of, I think, the next wave, and it's happening now.
Great. I think, Patrick, you touched on it a little bit with your watch. So my question is, how does the proliferation of new hardware, including mobile, tablets, wearables, how does all of that kind of change the way a consumer interacts with their financial life? And maybe you want to give an example. What do you use your watch for to make your life easier from your financial management standpoint?
Yeah, it's kind of like people have a Fitbit or an Apple Watch or whatever. It's you see how many miles you walk that day, kilometers, whatever. It helps you monitor your fitness, helps you monitor your financial fitness. That's where I think the real power to motivate is to when you get into the area of behavior. It's really exciting and fun to be able to. I have a problem. I admit it. I love high-priced coffee. It's a problem, and if I go buy a Starbucks, it's really hard not to stop. So, but through behavior modification and reminders that I'm saving for this trip, I have managed to curtail some of that. So that's where I think the exciting thing is. I think the fact that I could sign up for Wealthsimple on my phone, wow, who could have imagined that years ago, that you could sign up for an investment account on your phone? All boats rise. It's an exciting time.
Great.
I was going to say high price for coffee doesn't always translate to high quality at Starbucks, being from Melbourne. So, no, I think what it comes down to is mobile and wearables brings transparency and more insight into what you're doing on a regular basis. I think those coffees do add up, but really do, like you can get a lot more granular and just track your spending with programs like Coho and so on, much more granularly, and you can save. And I think, especially in Canada, where retirement and people thinking about how much do they have to live on, it's a great way to, enroll millennials and really get people starting to think about saving and how do they plan for the future. And it's much more relevant and in your face on a regular basis.
I'd like to pick up on that and extend a little bit. I agree it's all about transparency, but it's also about engagement. So finances, frankly, is not something that people enjoy, right? If there's anything else to do on a weekend, it would be preferable probably to do those things than think about, where you're going to get the most bang for your buck in terms of managing your finances. But again, I return to some little known facts that I think is really needs to be upfront in Canadians' awareness, which are things like the mutual fund industry. It's about a third of the wealth in the country that is in mutual funds at the moment. And mutual funds, Canadians actually pay the highest fees for mutual funds of any country in the world. So we pay more than anyone globally. And at the same time, the majority of mutual funds, 75%, underperform the benchmarks that they're compared against. So this type of stuff, which is, the regulators are starting to provide a little bit of wind at the back. I certainly agree with the comments earlier in regards to how challenging it is to innovate under the regulatory regime. It took us 1.5 years to work with the OSC to launch the first robo-advisor in the country. But at the same time, they are advocates for the consumer as well. And they are providing a wind at the back, at least within, as I see from the brokerage side, because they are forcing CRM2, which is all about fee transparency and making everyone aware of what it is, you're actually paying and what that means over the long term when you add up the consequences of those fees. It can have a really tangible and significant impact on the quality of life. And the fact is that, bottom line is that finance and money and how we manage that is the means by which we do things. It's the means by which we take care of our families. It's the means by which, we fulfill our dreams, right? So wearables, mobile, what's most important about these devices is it's not the gimmick aspect of it. What's most important is that these devices have become integral to how we live our lives. They're with us all the time. You don't need to go to a machine and log in order to engage with a service provider. So with these devices, fintechs and certainly traditional institutions as well can become a more important part of people's lives. And through that, and certainly I'm hoping within the investment space, through that, help people to be more financially aware and competent, and help Canadians who can sometimes be a little, lack a little inertia, to get over and really start to do something profound in when it comes to managing their money.
So it still comes down to convenience. We've got watches, cell phones, tablets, whatever. It still comes down to convenience. It has to be better than what it's replacing. So if I'm going to make a payment, I can either pull out my credit card or debit card, and used to have to swipe it and sign, and I had to dip it and put in a PIN. Now I can tap and go, or I can pull out my cell phone. I've just logged in by touching it. I could just launch my payments app, so now I can make my payment. So is it replacing it? Is it making it better? Well, yeah, I think it is. But now with ubiquity, I have to be able to use this everywhere, because anybody here, you go after, when this is done, you're going to go buy something, and even if this is super convenient, if you go and you say, I'd like to make a payment, they say, well, we don't accept that. It's really of little value. So ubiquity and convenience are hand in hand. I think as well, the integration of additional services. So now this is really cool. I make a payment and the receipt ends up there, and maybe there's coupons there, maybe there's all kinds of add-ons. That's where the power lies. That's where the power lies. Not just in form factor, but in the power, leveraging the power, harnessing the power of this little supercomputer.
Perfect, thank you. Being cognizant of time, why don't we open the floor to a few questions for our panelists?
Thank you, AJ. Yes, I'm sure you've got questions. We have a couple of microphones circulating. While we're waiting for some, I'll just quickly share a couple of small things that I've been noticing to complement what you said. Anecdotally, I was dropped off at Canada's Wonderland with my youngest son, who's 12, without my wallet. I forgot it at home, which never happens. But thankfully, I had my smartwatch with me, and I was able to buy him lunch because it works with any contactless terminal, any of those little tappable terminals that every retailer and restaurant has. So I was going to have to call my wife Kelly to come and bring me some money, but instead I just had to tap, and sure enough, the transaction was completed on those little Moneris terminals, and it was great. The other thing I wanted to mention is that I did some work with Capital One Canada, Capital One in the US first, and they have a really neat, I'm not sure if you're familiar with Amazon Echo or Alexa. This is not really in Canada, but this is sort of like a personal assistant for your home, not unlike Siri. It's a cylindrical speaker with a very sensitive microphone, and you would, you're cooking dinner and you would say, Alexa, that's the wake word, Alexa, play me some 80s music. Or Alexa, what's the score of the Blue Jays game, and so on and so forth. And she will give you a real-time, it's all in the cloud, no hard drive. She'll give you a real-time answer to your questions. Capital One was the first bank in the States to offer an Alexa skill, as it's called, where you can now conduct transactions using your voice, or you get information on your account. You can say, Alexa, when's my credit card payment due? Alexa, transfer $1,000 from my checking account to my savings account. Or you can even say now, Alexa, how much did I spend on Amazon last month? And you will hear a human-like voice. So I think, as long as privacy and security are respected, the conveniences of a smartwatch and the conveniences of using your voice to get information about your financial situation, whether it's a mortgage payment or getting your balance, I think people like that if it's not a gimmick. That's kind of a couple neat things that I noticed this year. Well, all right, with that in mind, that was my way of stalling until we had a first question. Do we have one? Oh, here we go, please.
Hi, thank you. For the panel, how is this unbundling going to affect banks in terms of the savings side? So I'm thinking that once you get all the service, customers requiring services, banks usually require scale, I thought, to hold regulatory capital to provide some safety. So who's holding the baby there? Does that affect the credit multiplier and that safety net? And specifically for AJ on the capital market side, what have banks learned from previous cycles to avoid overpaying on what might be the next land grab?
Anybody want to take the question first?
I'll start very briefly. In terms of financial institutions, I was having trouble hearing your question. The financial institutions, where's the safety, security and privacy, and how do they make sure that there's finality?
I think it's more to the integrity of savings accounts. Is that right?
Okay, is that better? Okay, try again. So the unbundling that's happening with services, that's stripping away of all the added value products from banks. What I think they're left with then is just holding savings, and with lower scale, how does that reflect in terms of their regulatory capital and that cushion to protect those savings? And does that have any negative effects in terms of the credit multiplier and stimulating the economy later?
Well, can I just say, I mean, what's an interest rate on a deposit account? 1%?
But that may not. I'm looking at secular through.
No,
this
but
cycle,
I guess, if you look at lending, for example, one of the reasons we exist is because people pay 20% on their credit cards, and there's this huge gap, which is why Lending Club was also created to bring it, depositors and borrowers much closer together. From an unbundling perspective and what it does for banks, I think banks will still have a key role in holding deposits. It's just innovative ways to access capital and deploy it and get it out there. I think that fintechs can really help and work with banks to help them get to customers in a more efficient way. I think that's what it really comes down to, if it stacks up and makes sense. They'll still be regulated. I think banks, still provide a really important. They've got a great responsibility in the financial ecosystem, and will always be there. I'm not sure if I'm really getting to the heart of your question, but Christine, do you want to?
Sure. So I think your question comes down to trust, right? I think that it comes down to is my money safe, and if we pull apart the various functions that exist in the current format of banking in Canada, does that mean that what remains will be less sturdy, if I understood correctly? I think the answer to that is no, because it is highly regulated, because these are, very, very well-established, competent institutions. They can scale up and they can scale down in an effective manner, I'm quite sure. But also, you don't need that kind of cost structure in order to provide a trust and safe and secure solution. So, the expense structure that's in place and the profit structure that exists beyond that expense structure, that's not what is necessary in order to provide that service. And so it's a recognition of that, I think.
Yeah, I echo that. The financial institutions are highly regulated with OSFI and other bodies making sure liquidity is there. I don't really see that as much of a concern. On some of the really, really small institutions, well, perhaps, like Everlink, we serve over 90% of credit unions in Canada, about 30% of banks and 40% of ISOs. So when I look at the credit union market, we serve almost 300 credit unions. Some of them are very, very tiny. So liquidity there is an issue, but then the regulator steps in and they consolidate or they otherwise get funded. I don't really see that as a problem. And FinTech, well, what they do is they provide alternatives. They will actually, in some cases, lower the cost structures of financial institutions, and they will also broaden the reach, where they might not have a line of sight to a particular consumer or a particular product or function. By partnering with a FinTech, they now do. That's certainly our case.
Yeah, we're very big in the deposit market, but that, a lot of electronic efficiencies have been brought to that for a while. We have customers who manage over $1 billion in deposits with one administrator. It's pretty cool, all electronic. So, but in terms of the FinTech world, what we saw when peer-to-peer lending first came about was that these, it wasn't just investors, people like us looking to put money into peer-to-peer lending. The big banks were all at the back door with bags of money. Can you just take my $1 million and see what you can do with it? Can you just take my $10 million and see what you can do? We saw it all. It's good to see. And in terms of the regulators, I may complain about Canada not having a national securities regulator, but from a banking perspective, look, come on, guys. Look what happened in 2008. We did awesome. Canada really, we're the #1 brand as far as I'm concerned. Our regulators are awesome in terms of, to our, they make our customers jump through all sorts of hoops, and we help them jump through those hoops. So.
We have time for one more question before our break. We've got one over here. Thank you.
Hi, Chris Giantsopoulos from PayUpJack. We're a person-to-person money collection app for social organizers. Since we're in the P2P space, blockchain obviously is a big thing for the future, and we all talked about how basically the banks have a good opportunity to centralize a form of a blockchain, and we know it will look different in the future. My question to you is, how do you think blockchain is going to affect both the frictionless payment side as well as the actual transaction processing, whether you're doing loans or whether you're doing P2P or whether you're doing B2B? Thank you.
Okay, so I feel like maybe this is closer to my space. So, these businesses where this exchange of money, whether it be kind of, buying and selling stocks, whether it be through different, payment exchanges and so forth, all of this is basically, the systems around it are still designed for, many, many decades ago. And there's all kinds of overhead that goes into those processes. It's like audits on top of audits on top of audits, in order to make sure that the transaction that left one entity is exactly what the receiving entity expects to receive. And so where blockchain becomes of interest is really as a means to alleviate the expense structure around all of those transactions and the ways in which these different enterprises are exchanging data, essentially. And I think it's still quite early in, as a technology. It's still quite emergent. From my discussions, even with people who are very much in my industry, there's still a real lack of understanding of its potential and how exactly it could be leveraged. But in its essence, that is the point, is secure transactions without the same cost structure.
At the risk of being just a little controversial, I've heard about blockchain for a while now, and in some respects, it's hard not to imagine a solution looking for a problem. But there's definitely something to it. There's definitely something to it. From a technical perspective, it's got to get a lot more effective, a lot more efficient. You can't. We process several 100,000 transactions a second. And there was a big breakthrough when blockchain said we did 4 transactions a second. So there's some technical hurdles that need to be overcome, and they will be. Prior to being the CEO at Everlink, I was the CIO at Payments Canada, or it was then called Canadian Payments Association, now called Payments Canada. And many of you might be familiar that Payments Canada, along with a number of partners, have begun an exercise on faster payments. And blockchain does figure into that as a technology that perhaps might help to really enable particularly bulk transfer, particularly large value transfers, particularly transfers of monies from one currency to another, international payments. That's where it seems to kind of really figure in. But for transactional stuff, you're going and tapping at Timmy's, I don't see it.
I'd say it's pretty exciting from a lending standpoint, especially cross-border lending. So actually trying to understand who the applicant is and somebody who lives in another country who wants to transact here or abroad. I think it brings a whole lot of a new world of integrity and trust, and opens up businesses like ours to lending to people in other jurisdictions. Anything?
Yeah, we see it as more faster. Well, we see it as more secure infrastructure. To Mark's point about speed. So we're ready to use it anytime, but we're always wait to dance with the customer before we delve into these newer technologies, and we have not had the market requirement yet to do so.
Great. Thank you very much to AJ Gopal of BDC and his amazing panel of experts. Thank you. All right, so we're going to take a short break for refreshments outside. We have some snacks, coffee and tea. Please network, enjoy, take a break. Don't forget the restrooms are right down on the right side here. And we will resume at 3:25 sharp. We will see you back here in just under 15 minutes. Thank you very much. Great job. Thank you. Thank you. Good job. Yeah, thank you.
Thanks.
Sorry if it is Gopal.
Yes. Yeah.
Okay.
Gopal, yeah.
Gopal.
Close enough.
Gopal. Oh, sorry.
No, don't worry about it. So I've got that.
All right, thanks.
Thanks again.
Hi. Yeah, thank you. Thanks. Hi, how are you?